Plutus people, since you have mastered what a delta is, we're going to show you how delta works in real life option trading, and I'm very excited to show you that on Questrade, which is going to be the brokerage that we're going to use for option trading. In other exciting news, due to popular demand, we are going to be doing a Q&A on our Instagram channel, and the handle is down below in the description. So please ask us all the questions, DM us, and we'll be happy to take them up in our next video.
In our last video, we went over how delta impacts price movement of an option contract. In this video, we will try to understand delta by applying it to a call option and a put option. So for our first example, I've looked at a call contract for Netflix. In order to make it more exciting, we're going to look at a call option contract that I have bought so that you guys can sweat with me and see if I'm right about this prediction. So if you look here, we have the strike, which is what I'm predicting Netflix to be. There's the expiry. So this is a quick review of what an option contract is. So we have the expiry as 18th June of 2021. We have the strike prices here, and these are the premiums paid for the said option contract. So we're going to look at my strike price, which is $675. So this is a bullish move because I am hoping that Netflix will reach $675 or be in the money, as I mentioned previously, by 18th of June 2021, by my expiry. So if we open this option contract, so I'm using Questrade to trade options. I think, in my opinion, it has the best user interface, at least amongst the Canadian brokers, for option trading. So don't be intimidated by all the information that's here. We'll break it down for you and make it very simple. As with any other option contract, there's always a 100 multiplier. So if you look at the bid and ask, this is what people are bidding or asking for premium of this option contract, and the last price was 3.95. So last person that traded this contract paid $395 for one option contract to control 100 underlying stocks of Netflix. So focusing on delta, which is the focus of this video, we look at the delta of 0.1468. This makes sense because, as we explained, a call option has a delta between 0 to 1. Looking at practically, this delta means that there is a 15%, just for ease sake, I am multiplying 0.1468 by the 100 multiplier, so it becomes 14.68, but to just to make it simple, we'll say 15%. There's a 15% chance that this option will end up in the money. This option contract will end up in the money. So maybe Plutus made a stupid bet, but we'll see as the time goes on because I'm very bullish on Netflix. And the earnings are coming up on April the 20th, as I mentioned in the ticker of the week. So we'll see how this plays out. But as the focus of our video is delta, this is what the delta for this call option is. And this is in line with what we have explained. So if you just looked at this call contract and said, hey, look at the delta, there's a 15% chance that this option will end up in the money. From a basics point of view, that will guide you and help you in making your decision. Now we're going to look at a put option. So just to make it exciting, we'll look at a different ticker. So in this case, we'll pick Tilray. Now, Tilray is a cannabis company. For some reason, I'm not fun, even though the last shirt I was wearing in the Delta video, it had a THC molecule on it. So bonus points for somebody who picked that up. So it had a THC molecule on my shirt in the last video. So we'll not to digress, but we'll look at a put contract to understand delta as applied to a put option. So in this case, we're going to pick an expiry of, just to stay consistent, closer to our last one. So we'll pick 18th June again. All we want to see is just a put option, so we'll select puts. And I am bearish, where I'm predicting that Tilray will be going down in price by 18th of June. I'm thinking that it will go down to $14. Currently it's trading at $17.40. Well, I'm hoping that it will go down to $14. So I'm going to buy a put option contract by paying a premium of $115. As with every option contract, everything is in multiple of 100, so 1.15 times 100, that's how I'm paying $115. So we're going to click this option contract. Now, if you look at this option contract and go to delta, which is the focus of our video, what you'll see very interesting here is that it's being demonstrated or shown in brackets, which signifies that it is a negative value. This makes perfect sense because if you watch my delta explanation video, put options always have a negative delta because put options have a negative correlation with their underlying. So underlying Tilray, in simple terms, what it means is that the value of an option contract, put option contract, will rise as the underlying stock goes down in value. So negative correlation. The delta on this option contract is 24.65% because I just multiplied negative 0.2465 by 100, and just for ease of understanding, we'll say that there's a 25% chance of this put option ending up in the money. So a better bet than my last Netflix option that I had purchased. What's also really interesting quickly is that if you hover over delta here, it gives you a quick definition, again proving that it is a very nice user interface. And as time goes on, we'll be able to understand every single piece of information that's on this option contract. Just a final interesting piece on delta. As we mentioned in our last video, an at the money option contract will have a delta of 0.5 because there's a 50% chance that an at the money option contract will end up in the money. So just to demonstrate this quickly, we'll look at Facebook as the ticker, which is trading at 302.82. So the closest strike price to that is 302.50. So that we would take that as an at the money option contract. So if we look at a call option, it will have a positive delta as explained previously. I'm just reviewing that quickly, but it's an at the money option contract. So its delta would be, you guessed it right, 0.5 or 50%. So this is not exactly at the money, but close enough. So it's 52.1%, or there's a 50% chance for this contract to end up in the money, or 52.1 to be precise. But it demonstrates the point that an at the money contract would always have a delta of 0.5 or roughly 0.5 because prices don't read textbooks and they're not exactly on the dot as the strike price. So I hope that clarifies delta for you and helps you make informed decisions when using the delta Greek in your option trading.
It's time to make you guys some money again. We're talking about ticker of the week. Today, the ticker of the week is Netflix, ticker symbol NFLX. It's trading in the range of 550. I'm super bullish on Netflix, and I think it's gonna hit the 700 mark. Earnings are coming up in about a week, so keep an eye out on Netflix. It also has one of my favorite shows right now. This is a robbery, the world's biggest art heist, and it has one of the paintings that I really enjoy, the Storm on the Sea of Galilee. So please keep an eye out for that. We'll be talking about collectibles on this channel as well going forward, so stay tuned for that.